Hi, this is Tony Sagami. Most of the time I use this column to tell you about fantastic companies and great opportunities. This week I want to take a little different tack. I want to talk to you about a company that I think you should stay the heck away from. Last Wednesday, a red-hot Chinese internet company sold its IPO on the New York Stock Exchange to great fanfare. The company I'm talking about is called RenRen. It's a company that's called the Facebook of China, and its ticker symbol on the NYSE is RENN. RENN. Now, the reason that Ren is so popular is that it is the very first social networking site to go public in the United States. And that has a lot of people very excited, because remember, Facebook isn't public yet. So this is the very, very first one. Now, according to the China Internet Network Information Center, China has about 457 million internet users at the end of 2010. And about half of those people use social networking websites. RenRen claims to have 117 million registered users. That's a pretty big number. Now, investors are so excited about RenRen that its IPO last week soared from a price of initial $14 to as high as $21.50 on the first day of trading. It raised $743 million when it sold 53 million ADRs. Now, after shooting up as high as $21.50, RenRen now has a market cap of about $5 billion. To give you some perspective, Baidu.com, which is a very profitable internet company in China and considered kind of the Google of China, has a market value close to $50 billion. Now, the real question is, does RenRen deserve that hype? And is it a stock that you should consider? I don't think so, and here's why. First of all, the majority of RenRen's users are college students. RenRen is used to reconnect with old friends and classmates, just like you do in Facebook. This emphasis on reconnecting with real-life friends is very popular all over the world. Doesn't matter what nationality you are. But the social networking industry in China is very fragmented by demographics and by users. For example, RenRen concentrates on college students, but it has several competitors. Qzone dominates the junior high and high school market, and Kiaxin 001 is popular with white-collar professionals, and 51.com is extremely popular in the smaller second-tier cities and the more rural interior western Chinese people. Now, take a look at this chart. As you can see, RenRen is very popular, but it's still only the third largest social networking site in China, and a very distant third. And as you can see by the next one, RenRen is way behind Qzone, as is everyone else. So it is a social networking site, and that makes it comparable to Facebook, but it doesn't dominate the Chinese market like Facebook dominates the U.S. market. But let's take a look at some cold hard numbers instead. In the first quarter of this year, RenRen lost $2.6 million in the first quarter on $20.6 million of sales. Now, that doesn't sound very good, but it is an improvement from the first quarter of last year when it lost $12.1 million. So it cut its losses by 83%, and that has some people in Wall Street saying it's moving in the right direction. For the full year 2010, RenRen did have a 63% increase in revenues to $76.5 million. But it also posted a loss of $64 million. Think about that. It added $74 million in gross revenues, but it lost $64 million. So it lost almost as much as it pulled in. Now, on a revenue basis, RenRen is no Facebook either. RenRen generates about 80 cents per user advertising revenue, compared with about $4 per user for Facebook. Also, here's a stat that bothered me. Of the 117 million users, only 31 million logged in more than one time last month. So from my perspective, RenRen is not the Facebook of China, and a company that I wouldn't be too interested in. Bottom line, RenRen could actually continue to go higher. The momentum crowd really doesn't care that much about fundamentals. But if you do take a look at the fundamentals, I think you'll find that RenRen is a stock that you should avoid. Until next week, this is Tony Sagami signing off.